K-pop demon hunters Saja Boy's breakfast meal and Huntrix meal have just dropped at McDonald's. They're calling this a battle for the fans. What do you say to that, Rumi?
It's not a battle. So glad the Saja Boys could take breakfast and give our meal the rest of the day.
It is an honor to share.
No, it's our honor.
It is our larger honor.
No, really. Stop.
You can really feel the respect in this battle. Pick a meal to pick a side.
Ba-da-ba-ba-ba.
At participating McDonald's while supplies last.
Welcome to Learn Finance 101, where we break down the key economic and financial concepts and events taking place over the world. What a year 2025 has been, right? The S&P 500 is up around 16 to 17%. We've seen AI stocks go absolutely wild. Crypto's had its moments, but underneath all that noise, there's been this quiet, powerful theme that's actually driving a lot of the real gains. De-Globalization. You know what I'm talking about? That whole idea of countries and companies saying, hey, maybe we shouldn't rely on one tiny island for all our chips or one country for all our manufacturing. It's reshoring, bringing stuff back home. Nearshoring, moving it to friendly neighbors like Mexico. Friendshoring, working only with allies. And yeah, sometimes just slapping tariffs on things to make imported stuff more expensive. It's the opposite of the super connected world we've been living in since the 90s and 2000s. So today, I want to sit down with you, like we're just two friends having a long chat, and really unpack this. Why is it happening right now? What does it mean for the economy? And most importantly, who are the early stock winners we're seeing in 2025? We'll look at the real data from reports like T. Rowe Price's mid-year outlook, which literally called this a post-globalization world. PGIM's stuff on dual-track globalization, and even the Financial Times talking about chips, gold, and guns as the big winners. By the end of this episode, you'll have a solid map of what's going on and why it matters for your portfolio. Let's start with the basics. What even is de-globalization? Picture the old globalization model. Companies chased the absolute cheapest labor and resources anywhere in the world. China became the factory of the world. Taiwan made almost all the advanced semiconductors. Russia and the Middle East pumped oil. It worked great for decades, lifted billions out of poverty, kept prices low, made profits huge. But then the cracks started showing. COVID was the first big wake-up call. Remember those empty shelves? Supply chains that were just in time suddenly became just in trouble. Then Russia invaded Ukraine, and energy prices went through the roof. Then we had Red Sea shipping disruptions in 2025 that made everyone think twice about relying on faraway routes. And of course, the big one, US-China tensions. Export controls on AA chips, tariffs ramping up again, and both sides basically saying, we need to be able to stand on our own feet. So now we're seeing this shift. Companies are saying, okay, maybe it's worth paying a little more to have production closer to home or with trusted partners. Governments are throwing money at it. CHIPS Act extensions in the US, the EU's Green Deal, China's push for self-reliance. It's not that globalization is dead, it's just changing. Some things are still global, think consumer goods, but strategic stuff like chips, energy, defense, that's coming home or to allies. Now, let's talk about why 2025 feels like the tipping point. Tariffs have gone higher, especially on Chinese imports. The Chips and Science Act has already funneled billions more into domestic semiconductor plants. The Inflation Reduction Act extensions are pouring cash into clean energy manufacturing here in the US. Europe is doing similar things with its own industrial policies. And China's dual circulation strategy is all about relying less on exports and more on domestic demand. It's like everyone's building their own fortress. Economically, it's a mixed bag, and I think that's important to say upfront. On the positive side, we're seeing real job growth in manufacturing, up about 5% in the US in 2025. Companies are spending a ton more on capital expenditures, building new factories, warehouses, you name it. That's great for certain stocks. But on the flip side, higher costs mean inflation can stick around longer. We're still at about 2.7% in the US, and that's partly because of these supply chain shifts. Global growth could slow a bit too. The World Bank estimates de-globalization could shape 0.5 to 1% of annual GDP growth over the long term. So it's not all sunshine and rainbows. But here's where it gets exciting for investors. Markets are rewarding the companies that...
AI is incredible. It can teach you how to fry an egg and even write a poem, pirate style. Yarr! But it knows nothing about your work. Slackbot is different. It doesn't just know the facts. It knows your schedule. It can turn a brainstorm into a brief. And it doesn't need to be taught. Because Slackbot isn't just another AI. It's AI that knows your work as well as you do. Visit slack.com/meet Slackbot to learn more.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
A position to win in this new world. US-focused stocks have outperformed global ones this year. Domestic heavy industrials have been crushing it. And that's not just random. It's because investors are betting that these structural changes are here to stay. Let me give you some concrete examples of early winners we've seen in 2025. Take Caterpillar. Cat stock is up over 60% year to date. Why? Because every time a new US factory gets built, whether it's a semiconductor fab or a battery plant, they need heavy machinery. Caterpillar makes the bulldozers, excavators, everything to clear land and build infrastructure. Rockwell Automation, ROK, is up around 40%, and that's because they make the automation systems that let these new factories run efficiently with fewer workers. Then there's the broader theme people are talking about: chips, gold, and guns. Semiconductors like Micron have been up 210 to 230% on AI demand plus government subsidies. Gold miners have ridden safe haven flows and inflation fears, some up 180%. Defense stocks we'll cover in a later episode, but they're holding strong too. I had a listener email me a couple weeks ago. She's a teacher in Ohio, and she said she put some money into CAT back in January 2025 because she kept seeing news about new factories popping up near her town. Her portfolio is up 25% while the broader market had some choppy months. That's the kind of real-world impact we're talking about. Of course, there are risks. If geopolitical tension suddenly ease, some of these premiums could come off. Or if inflation spikes too much, the Fed might have to keep rates high longer, which hurts growth stocks. But the momentum feels structural, not cyclical. Reports from PineBridge and Deloitte are saying this is reshaping portfolios for the long haul. So that's the big picture for today. De-globalization isn't a fad, it's a real shift, and it's creating opportunities for investors who pay attention. Next episode, we're diving straight into the heart of it. Semiconductors. Why chips are the most strategic asset in this new world and which stocks are absolutely killing it. Thanks so much for hanging out with me today. If you're enjoying this, hit subscribe, drop a review, and tell a friend who's into investing.